Oh, absolutely. In fact, if the inflation numbers come in hotter than expected and the CPI, for example, PPI come in hotter than expected, the market's already ahead of itself. That's why I think this is really going to be a volatile year in the markets, and investors should be prepared for that. Be a bit defensive when markets are hitting all-time highs. Maybe not get out of all equities, but certainly take profits in names that have rallied significantly and be prepared when there are pullbacks because there are going to be pullbacks. I'm of the belief there will be two or three pullbacks this year based on, I think, a pretty bumpy set of news headlines are going to come throughout the course of the year. Investors need to be prepared for that. So I think it's entirely possible, Karen. The market's already ahead of itself. It's at an all-time high right now. It's hard to get much more ahead of yourself than that.
Michael, getting into some of your allocation ideas, you've given a shout out to financials and you say dividends matter. We're setting up for bank earnings this week. The likes of Goldman Sachs, JP Morgan, Wells Fargo scheduled to report this week. We've been a little bit spooked in Europe around the Archegos fallout and how that's impacted some of the banks. But what sort of shape are the US lenders in at this point?
US lenders are in pretty good shape. And I'll tell you why, because much of the reserves that were set aside for the expectation of significant home defaults, those defaults really didn't happen. And so you really have excess reserves that we put back into the bank balance sheet to be spent for other purposes. You are going to have higher net interest margins. You're already starting to see that trickle out through the financials. What happened to the hedge fund problems recently that you've seen is, I think, absolutely what Jay Powell said. It was really a risk management issue. That's why it's been limited to a few banks, one of which obviously was significantly affected in Europe. So I can understand why Europe focuses on that. US banks, I think, are pretty healthy as long as there are risk controls in place, as far as we know they are.